Welcome back to America Decides. Stocks fell, all the indices, sharply today, due in part to concerns about tariffs. Listen.
Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored.
That is Federal Reserve Chair Jerome Powell. This is CBS News MoneyWatch correspondent Kelly O'Grady. Kelly, great to see you as always. So you know and I know, and our audience now knows, because we're going to tell them, that what the Fed chair said was not a surprise necessarily, but it tamped down any psychic expectations the market might have had, well-placed or not, that interest rate cuts were coming anytime soon.
Oh, absolutely. And you know just as well as I do, Major, that Jerome Powell tends to be very tempered with his language. So to hear him say something like persistent inflation, it's not the first time we've heard him say that, but the fact that he's getting more comfortable saying that language, certainly investors didn't like it. The two things that really stood out to me, Major, and I feel like impacted investors this afternoon, one, that there's the potential for stagflation, because he said we could be in a challenging environment where our dual mandates are at odds. And of course, the dual mandate for the Fed, keep inflation down and also keep the labor market strong, keep the economic growth going. When you have those two at odds, that's when you get stagflation. And he also said the data is showing that we are seeing some economic slowdown in terms of growth. And Powell and the Fed, they are data driven. And so the second he started speaking, Major, you know, I always love to throw up a chart of the Dow when Fed Chair Powell starts speaking. It fell off a cliff because, yes, we are not getting interest rate cuts anytime soon because of that worry about inflation.
And there was a lot of volatility within the NASDAQ, the tech-driven NASDAQ, and a good portion of that, as I understand it, was about NVIDIA.
That's right. So NVIDIA shared with everyone yesterday evening after the markets closed that they're going to see a $5.5 billion hit to their bottom line this quarter. The reason being some unexpected export restrictions. Now, the government a week ago said to NVIDIA, you cannot sell your chip that you designed to sell to China without getting a license. China's a really big market for NVIDIA, and in the past, licenses have not been granted when they go to the government. So this is really just an escalation of that tit-for-tat trade war, but really, really hitting NVIDIA when it comes to future growth.
With the answers, as always, Kelly O'Grady, thanks so very much.